Ladies and gentlemen, welcome back to our next video. In today's episode, I'm going to show you and explain to other new cryptocurrency investors what short-term volatility in crypto markets does to your portfolio. Most new cryptocurrency investors expect from the moment they get into the crypto markets to see their portfolio growing straight away in the following day. However, this is a wrong perception, as nothing goes straight away in a straight line upwards, and before you see your portfolio growing up, you will need to wait for some time and see how short-term volatility affects price action and what it does to your portfolio in a short term. Let's take a look at Bitcoin USD dollar chart, and so I will be using an example so you can easily visualize and understand what to expect when you get into the crypto markets. Most likely new cryptocurrency investors get in at the wrong time. Even for experienced traders and investors, it's still hard to time the markets. So despite no matter how hard you try, including myself, there will be always a wrong time to get into the cryptocurrency markets. However, what you should do from the moment that when you buy cryptocurrencies, you should give some time before you see your portfolio growing. Okay, let's go, and let's say that we bought one Bitcoin a year ago, back in January 2021, at price level of $40,000. What most cryptocurrency investors would expect, as they are short-term biased, they would want to see their portfolio growing straight away up in a straight line. However, it has never ever happened. It will never ever happen again unless you are really good at using technical analysis skills, or just purely by luck you get into the markets at the real correct time at the very bottom. However, this is minority, and for majority of new cryptocurrency investors, all they will see for the next few months up to a year time, their portfolio going up and down, being a negative or positive. So we bought Bitcoin at 40k back in January 2021, and then after a few weeks time we could see our portfolio has dipped by 28%. Then we wait for another 2-3 months, and in May, from January 4-5 months, we could see that our portfolio value have increased by 57% from our initial buy level. We keep holding a Bitcoin, and a few months later, in July, we can see that the price has corrected, and again once more we see our portfolio tanked 28% below the value when we invested. A few months later, and back in November, the Bitcoin price has gone up and reached its all-time high at around $69,000, and this was the time when we could see that our portfolio has grown by 70%. However, over the next few months and until today, January 2022, Bitcoin price has gone down, and its value decreased by 7% below the value of our initial portfolio when we got in back in a year. As you can see, from January 2021 until the end of January 2022 today, it's 387 days, just over a year, and we can see that our portfolio is still 7% down. Therefore, for all new investors, I would like to point out that short-term volatility does affect your portfolio value in the short term, and you need to wait for a bit longer before you see your portfolio growing. And as recommended, new cryptocurrency investors should be focusing on a 3 to 5 years time cycles time frame. Just to prove this point, let's take a look at the long-term volatility. And all we can see here, again, this is a same Bitcoin price chart, And let's say that when we bought Bitcoin around these price levels. As you can see, price of Bitcoin is in accumulation phase, sideways moves. This is why this is a short-term volatility, does affect your portfolio and causing it going up or down consistently, so you're not making any uh, gains in the short term. However, if you can see, after some time there was a real Bitcoin parabolic exponential run which took Bitcoin price to the level where we bought today, let's say is a while ago in January 2021, 40k, which was a 405% increase. And just to prove my point that this is what happening in the short term, and all we're gonna see is after some time, and that's what's gonna happen after Bitcoin gone through the consolidation accumulation phase, which is a sideways move that is reflected in short-term volatility. We will see at some point Bitcoin price will go up and again repeat its exponential parabolic run to its next level, and this is where we will see our portfolio will be increasing substantially and will give us a good return on investments. So just to point out that new investors should not be expecting portfolio growing in the short term. They should leave their portfolio, close their laptop trading platform, unless they are using a dollar cost average strategy, and keep buying on a weekly or daily or monthly basis. They should not be looking at the portfolio every second day. Let it grow over the time, after 1 year to 2-3 years time, and this is when they will see their portfolio giving them good return. Just to summarize, we reviewed today a short-term volatility, how it affects your cryptocurrency portfolio, and why it's normal for new cryptocurrency investors from the moment they invest to see a portfolio going below its value, initial value, and why they should not be panicking, and remain calm, wait, be patient, and they will get rewarded in the long term. I hope this video was valuable and you learned and understand what short-term volatility does in the short versus long-term time. Thank you for tuning in. I'll see you in the next video. Stay crypto.